Here are the top 3 things that are absolute game changers when it comes to 0% interest credit cards. The first one is, which you guys probably already all know, is that you're able to go use your credit to invest with no money, right? You don't have to pull out any of your cash. You don't have to go pull out equity on your house. You don't have to go borrow money out of the stock market. You're literally able to use your credit at 0% and invest in real estate. Now, if you go make any sort of return on that, even if you make a measly 4 or 5% return, and then you're borrowing it at 0%, guess what you just made? 4 to 5%, right? So you guys, you're gonna be arbitraging one of the best ways you can ever arbitrage because you're getting this at 0%, okay? So that's number 1. Number 2 is you get to earn all the rewards, right? A lot of us take out credit cards because we love the points. We like to travel. Me personally, this is how I pay for all of my family vacations is I have so many of these different business credit cards that I'm constantly using. And I got all these points. I don't even have to pay when I go on vacation. I have all these points, pay for the hotel, pay for the flight. Or if you guys just want to get the money back, there's all these rewards. But a lot of people buy a credit card for the rewards. And now you get to go expense all your business stuff. It is a really cool game changer, okay? Number 3 is it does not show up on your personal credit. So when you go get these personal or these business credit cards, as long as you pay them, it will not show up on your personal credit. And let's say that you got $100,000 borrowed on your credit card and you max it out, guess what? When you go to apply for a car or a house or anything like that, it's not gonna show up on your credit. It's not gonna count against you. So that way you can maximize that 0% and not have to penalize your credit. Hopefully that relates to you guys. I know, for example, I use Home Depot cards and other credit cards. I'm taking advantage. I always pay my full statement balance, but I might be carrying, for example, right now on a Home Depot card, I use it for all my fix and flips. I'm carrying like a $60,000 balance, but it's all 0% for 12 months, right? So I'm gonna take advantage of that. But the problem is when anybody goes and pulls my credit, and now I show a high utilization on my credit. So I'm going a little bit into the weeds of credit right now, but if you have a personal credit card and you have it, even if it's 0% and you have it almost maxed out, your credit score is gonna drop, right? But when you do these business credit cards, guess what, guys? It doesn't even show up on your credit. So that is the third and final game changer. Now, before you go use a 0% interest credit card, it's very important that you understand them because I am not at all condoning going and getting a credit card and maxing out your credit card and getting yourself into high interest credit card debt, okay? You need to be very strategic how you use these. So first thing, when you're looking at these credit cards, you got to understand the term. How long is the 0% interest period? I've seen them anywhere from 9 to, I think the highest I've ever seen is 18 months. There might be some that go to 24, but in general, they're about 12 months. 0%. So first off, you need to know that date. What I do personally is I put a reminder in my calendar so I know on that date, I need to make sure I pay this off. Because guess how the credit cards make money? By lending it to you at 0%. You guys might be like, what? How does that work? They're losing money. Well, A, they make money on all the fees. But secondly, there's so many people that do this and then they get to 12 months and guess what? They can't pay it all down. And now your interest rate went from 0 to like 20 or 22 or 25 or 30, 29%. Who knows what it is? So understand when that expires and make a plan. But you guys want to know an absolute game changer to work through this? I'm going to blow your mind, guys. Everyone, whenever I tell people this, they're like, that's not possible, Casey. Why would the credit card company ever do that? Like, I cannot tell you how many times people have told me this, but check this out. If you plan your business well enough and you are able to pay off that credit card, so I'll give you a scenario. If you take out a $20,000 credit card with Chase, you go use it for the 12 months. Within that 12 months, maybe on the 364th day of the year of that 12 months, you go pay it all off or whatever. Just pay it off before that settlement day and mark that on your calendar so you don't forget it. But let's say on that last day, you pay off the $20,000. Okay, so now your credit card has 0 balance, but at this point, this credit card is not very useful, or it's just a normal credit card now because now it's gone up to 22%, let's say. So if you use it and you don't pay your balance, you don't pull your full statement balance, now you're paying normal interest like a regular credit card. But guess what you can do? Check this out. What you do is you go to Chase and you say, hey, and I'll give you guys the contact. I'll show you exactly how you do this. You go, hey, Chase, I want to get a second credit card. Okay. I want to open a new credit card. I want to open, instead of doing the business unlimited, I want to do the business cash plus. So you go open credit card number 2. Now, credit card number 2 is a new credit card. And guess what? It has 12 more months of interest free, right? But let's say that you only get like 5,000 on this card because it's your second one. Or maybe you're lucky enough they give you another 20,000. But remember, you had 20,000 over here, but this 20,000 is not very useful, right? This 20,000, it could be used as a credit card, but you're not getting 0%. Guess what you do? You get on the phone, all right? It's exactly what I do every year. I just did it last week, actually. And you call Chase and you say, hey, Chase, I would like you to take my available credit from this card, which is 20,000. I want you to transfer that over to this card. So if this card had 20, now it has 40,000. Guess what? That entire 40,000 is now 0% for 12 months. Is that mind blowing, guys? You just created more credit at 0%. And now this credit card, you go cancel, and it's a business credit card, so it should not majorly impact your credit to cancel it, okay? So this card now, all right, now we throw that one away. Now we got this card that has 40,000. Is that crazy or what? You guys think this is impossible? Most of you guys are gonna be like, that's not possible. Why would Chase ever do that? And that is exactly what I asked them. I'm like, wait, are you sure I can do this? They're like, yeah. They're like, do I have to get special permission? They're like, no, all you gotta do is call the Chase person, the representative. They do it all the time. And just, again, you're not doing a balance transfer. We'll talk about that later. A balance transfer is different. This is just a credit line transfer from the old one to the new one, okay? Pretty cool. All right, guys, we're just getting started on this, but that's one of my favorite parts. So back to it, understand how you're gonna use this credit card, and you've gotta have a strategy, all right? You've gotta have a way to pay it back on the back end, all right? I would not recommend going and buying a buy and hold property that doesn't hardly have any cash flow, and you use this money as a down payment, and now in 12 months, you gotta scramble, okay? You've got to have a way to pay it back, right? This could be a refinance. This could be maybe you're just lending it out for 9 months and you know you're going to make darn sure you're going to get your money back at 12. Or here's the other thing, guys. If you've built up some cash reserves, just know that you've got those cash reserves. And if your project runs long or whatever happens, pay it back. Because check this out. Back to this strategy. If you have the liquidity, let's say that same credit card, all right? We talked about it. It was 20,000 here, 20,000 here. Well, if I go and pay this one off and I have the cash to pay it, guess what? I'm essentially kicking the can down the road because I'm going to pay it off, but I'm going to go open it back up here. And that same 20,000 I just paid off, I can go charge it back to here. You guys see how I do that? Now, I'm literally just kicking this can down the road every year. I just keep going boom, 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 and I can just carry a balance at 0%. So talk about the uses, okay? Here are the best ones. You guys kind of hit a couple of them. If you're fixing and flipping, all your materials is all going to be paid for with that credit card. Also, your contractors, almost the majority of like the subcontractors I work with now, they will take credit cards. I mean, worst case, some of them charge me the fee, but you know what? That fee is going to be cheaper than a balance transfer fee, which I'm going to go to in a second. But literally, you could go flip an entire house as far as like the renovations. You could put all of that on a credit card if you wanted to. The other thing is utilities, right? Nobody mentioned that. If you're a buy and hold investor, put all your utilities, all your marketing. Let's say you're doing direct mail and you want to go get some direct to seller leads. Use a credit card. You could go do paper lead services and buy leads, right? You could go pay for your Prop AI subscription. You can pay for your texting platform, right? Your CRM, all that stuff you put on the credit card, right? These are all great uses. Because the other ones you guys are talking about is EMD or down payments or like bridge financing, right? Bridge financing means you might be in a tough spot where you need to come up with some cash quick and you need to get into some longer term financing, okay? You can use them for that. Here's the downside, okay? When you do that, you have to do what's called a balance transfer. Now on these credit cards, the balance transfer fee, I don't know what you guys see. I typically see around 4% they're gonna charge you. So if you had a $100,000 card and you need to do a balance transfer, they're gonna charge you $4,000, right? Now, if you think about that, that's only 4%. And if you do it over a year, you literally just got yourself a 4% loan. So if that's what you're doing, that's still pretty good. You're doing way better than what you're getting on the open market, right? And it's cash. There's no underwriting. There's no securing your house. There's no collateral, right? It's literally based on your credit. So there's two tiers, right? I prefer the rehab, utilities, all your normal expenses that you can use credit cards. Because guess what? There's no fees on that, right? They're typically the vendor is going to pay those, okay? But if you got to do a cash advance, you're going to pay that 4%, right? But again, the hack is you want to get these credit cards and you want to be able to spend them on, again, normal stuff you spend with your credit card. I mean, I know, so here's another hack that I know a lot of people do. They literally will get one of these cards. They'll just use it for everything they ever swipe a credit card with, right? And they just use it to be 0%. And then they just kick the can down every year. They renew it, and they're basically putting all those expenses at 0%. There can be some advantages to that versus, because think about, juxtapose that, right? If you got a 100K card, you could go and convert it to cash and pay the 4%, pay the $4,000, or you could keep the cash in your pocket that you get paid every 2 weeks or whatever from your W-2 or wherever your source of income. You could keep that cash in your account. Now go use that credit card for all the expenses you have in life, right? And just use that credit card for a year and then let your cash build up and then you could just pay it off. That's another strategy. Be careful as far as LLC protection and the corporate veil. There's a little bit of legal nuance there, but we're not going to get into those weeds for today. Well, how about this, guys? Let's play out this scenario because I've seen this happen before. People use 0% interest credit cards, right? They go borrow 100K because maybe they do 2 or 3 cards, because I'm going to show you guys just a little bit that you don't have to just take out one card right now. You could take out multiple at the same time from different credit card companies. But let's say you get 100K out and you get 12 months at 0%. I've seen a lot of people do this, but guess what? They go out and they don't deploy it, right? Before they know it, they don't have a deal ready to go, or they go put it into somebody else's deal and that they're like as an EMD or maybe as a private money lender. And then, so where you guys could get hung up is after 12 months, you don't pay it back, right? And now you've got this big balance. So that's one we've talked about. You got to be very strategic and very careful. Make sure you've got the cash reserves. There's 2 ways to mitigate this, okay? One way is you have the cash reserves to where you could pay it off. And if you got to wait longer, if you've lent that money out, or if you got to the money out on your own project to where you could cash it out. Because what you don't want to do is get to that 12 months and now you're paying on 100K, you're paying 25% APR. Like that's way too high. Okay. That might be better than what you're getting from some hard money lenders, but it's still way too high. Okay. So the way you mitigate that is either having the cash, or guys, this is a professional strategy. Right? I would not recommend this to go flip your first house using a 0% interest credit card, right? There's a lot of risk for that. And if you don't do it right, you could get stuck at the end paying that high percentage. What I do recommend though, is you find an experienced operator or partner with somebody who's already doing deals, who already has a track record knowing that, hey, I can get you cashed out in 9 to 10 months. That way you've got a 2-month cushion to pay off your credit card, right? Or they've got a fix and flip deal or whatever, or maybe it's lending, whatever the structure is, make sure that they are competent and they know what they're doing. And the other kicker is make sure that they're ready to deploy the money right away. Like I would not recommend starting, because as soon as you open this credit card, your 12-month clock starts. So you want to be ready to go, have a deal identified, and then go get the credit card. That way you can make the most of your money on that year. Because if you guys are tracking along with me, some of you guys are probably thinking, wow, I could go get a credit card 0% for $20,000 because I have decent credit. And I could go start making, if I lend that money out at 12%, guess what I could make? Let's see, let's do the math real quick. Well, that's pretty easy, right? On 20K, but let's just do it. 12% on 20,000. Okay. $2,400. At the end of the year, you would have created $2,400 of income and it would have cost you nothing, right? It's an infinite ROI, right? You're not having it's not a cash on cash return because there's 0 cash, right? But you want to be able to leverage that the whole year. I don't want you to go do it and you only get 12% for 6 months because you're not ready to go, and you only make $1,200. So HELOC or credit card, which one should I apply first? I would do both, honestly. Here's the key difference. Last week, we talked about HELOCs. That is a great strategy to do if you have equity in your house, right? Not everybody has equity in their house. So this 0% interest credit card is perfect for them. But if you have both, I mean, I would do both. This would be the priority, right? The 0% interest credit cards are the priority because it's 0%. If you do a HELOC on your house, you're still going to be paying some sort of percentage of interest, but this is 0%. So you cannot beat this one, right? But I would absolutely do both because you're opening up lines. Now you're able to go do more deals, ultimately create more passive income. Let's get into the top cards to use. I'm going to share a link with you guys to give you like the 0% interest credit card playbook and give you the exact blueprint of exactly how to go do this. And it's going to list all the top banks that I prefer, but I'm going to run through them really quickly. Okay. As mentioned, Chase is one of my favorites. Chase is 0%. They've got multiple options. They are the most flexible. They're the easiest bank I found to get this done, right? So 0% interest credit cards, Chase. They got several different options. They got lots of good points. So Chase is one of my primary go-tos, all right? Another one is US Bank. US Bank, coincidentally holding one of their cards. US Bank is another great one I've done. A couple other ones, American Express got brought up. They're another one I use. And Capital One has another good one. And Bank of America. I've never used Bank of America's, but guys, all the major credit card companies do it. But I would, if you need somewhere to start, I would start with Chase. And if you guys need a referral, I will actually get you guys in contact with an actual person at Chase who can get this approved. Because I'm sure a lot of people have been through that process where you're calling the credit card company, talking to somebody overseas or a virtual assistant or AI at this point. You're talking to them and you're trying to get your credit card approved. I would highly recommend going through the contact I give you, because here's the other cool thing about my contact. Sometimes you might get turned down for whatever reason, but this guy can actually go in and manually input some of your financial info to where you can get approved. And he's the reason I've been able to get approved for higher limits, because this guy helps me. So that is a really, really good hack to be able to talk to an actual decision maker at Chase. All you guys got to do is email me, Casey@YOHouses. So if you guys want an introduction to my Chase rep, or you guys want my little cheat sheet of exactly how to do this, I'm going to give it to you there. All right. And I've also got a really, really awesome give that I'm about to get to. Okay. So let's get into implementation and the resources. How are you guys going to go out and do this? Okay. I'm going to give you 3 different ways you can go out and do this, from just super involved to super easy. Okay. If you want to do it yourself and be super involved, again, I'm going to share you guys my quick little playbook. It's free. You guys can follow the directions. You guys can reach out to Chase. You guys can do all of this all on your own. And there's no cost in whatever you get approved for. Like, there's literally no cost to doing it, right? But it's going to take some time. You're going to have to bootstrap it. And there's a lot of nuance when it comes to pulling these credit cards and getting multiple ones approved. So the second one I recommend is Fund and Grow. So Fund and Grow, they manage all of the credit card applications for you. And I'm telling you guys, it is very nuanced to where literally you'll apply, they'll know the exact 3 to apply for, right? And then they'll actually do a second round of applying like 3 months later. And they've got this cool process where you'll go apply for like 3 of the best credit cards right away. They'll get you approved and get you limits, right? And then after 3 months, they will go and scrub your credit. They've got these little tools to where they'll get it to drop off of your credit. So now you can go apply for 3 more, right? And they'll do like 3 or 4 cycles in a year. And the way their service works is you pay like a one-time fee. I think it's $3,000 to $4,000, and they'll go get you approved for a bunch of credit. Guys, this is one of the first things I did to get and it depends upon your credit and your business history, and they'll let you know that from the start. But for example, when I started, they told me, Casey, based on your credit and your history, we could probably get you approved for around 120,000. So I looked at that as, okay, this is kind of a hack for me to go get approved for 120,000. My cost is $4,000. So if I'm looking at my percentage rate, I'm paying less than 4% to go get access to $120,000. I'm like, you're never going to beat that with a bank, and you're definitely not going to beat that with a private money lender. So I highly recommend those guys. If you really want to like professionally do this and get a highest limit you possibly can, I would go with Fund and Grow. But if you just want to bootstrap it, you can go do it yourself, and I'm happy to give you guys the guide. But what if you don't want to do with any of the hassle? And also, what if you're like, because I told you guys, you got to be ready to deploy the money right away, and you got to go with a strong operator. Well, this is the third option I want to talk with you guys, and I'm super excited. I'm going to be announcing it in the next week, but I'm doing a fractional offering where people can go invest on my fix and flips. And I've been working through fractional because nobody's ever done this. I'm like, fractional, because the whole foundation of using fractional is everybody can come and invest on deals with you because they're partners. Everyone in fractional that invested in one of my deals, they are a part owner. Like literally they're on the business agreement. So I was like, light bulb, why don't I get all those people to go get business credit cards in the business so they can go leverage it? They don't have to go create a business. They don't have to jump through all these hoops, right? Because here's the super cool thing. And I called Chase to verify this. I'm like, hey, the guy's name is Jeff. I'm like, Jeff, if I go get 100 people and they're all on my operating agreement to go get business credit cards, is there a limit on how many people? And he's like, no, Casey. And there's no limit on the amount the business can borrow. It's based on the borrower, right? So he's like, every single person who does this, Casey, we will look at them individually, right? So that'll dictate how much they get approved for. I can't tell you how much. We just got to try. And he's like, and I can't guarantee everybody will get approved, right? It's based on credit and a lot of different things. But he's like, but each one of those people could get a different credit card. So guys, this is what I'm structuring, which is so cool. We're going to raise around $1 million to go fix and flip and do a bunch of, it's going to be mostly fix and flip. We'll do a little bit of buy and hold, but we're going to do this project over 2 years, right? We're going to go bring in $1 million of cash, but then we're planning to bring in another $500,000 of 0% interest credit cards. So for example, if our minimum is $10,000, you could then go get a $10,000 credit card. And then I've got a cool little structure where you actually get a higher return if you're able to bring in the credit card, right? So I'm trying not to get too much in the weeds. I'll have a presentation on this later, but I wanted to present this to you guys too. If you're just like, hey, I want to do this, but I don't know how to apply. I don't have a business and I don't have a deal to go safely invested in, then let me know. I'd love to partner with you guys. So email me, Casey@YOHouses, if you guys are interested in this. And I'll be sharing this very soon, like all the fractional community, so you guys can jump into it. But I wanted to kind of foreshadow this a little bit today. And the cool thing is it's a low minimum. With my accredited fund, my minimums are 50,000, and just not as many people are comfortable doing 50,000 on their first deal. So I'm really excited with this one because it's a lower minimum. And again, we get to go use leverage business credit. So think about that. You'll go use business credit. You'll be able to do it for a year or two, right? And now you guys can start to grow like I did, and you guys can go get your second credit card, get your third one, right? Because then you can go open your new business because you're going to get a bunch of experience. You're going to get to see exactly how I do my deals. So I didn't want to go too deep on that today, but you guys can see I'm pretty excited.